Today's myth is that a non-bank financier can't work with an existing bank. I'd like to dispel that myth today by going through a real-life example that we had here at Hermes. So we've got a situation where the client, combining their balance sheet personally with their business balance sheet, has a number of assets against which the bank has provided a number of facilities. Now the assets here, there's the premises, the client's premises, there's their home, they've got some plant and machinery, nice little piece, there's a JBC there in case you're wondering, and we've got some accounts receivable. They're the assets of the business. Now against these assets, the bank has provided perhaps some term debt of some description. They might have provided some specific leasing or specific plant and equipment finance against specific items of equipment, which happened in this case that Hermes had experience with very recently. So I'm going to call that leasing, even though these days it's not really leasing, there's all forms of different plant and equipment finance, but you know what I mean when I say leasing. And there's some other facilities here, other business, let's call it another business loan here. And that's what's in place with the bank. And Hermes Capital comes along and the client says, look, I don't have enough money. I really need to increase my facilities up to here. And the bank says no, because using our lending parameters, we've loaned you a certain amount against your property, and because we've got your property, we're happy to provide some funding against some equipment that you've purchased. And when we look at the whole balance sheet, yeah, we've given you a bit of a business loan here, but we're comfortable with that. There's no more. So then along comes Hermes, and Hermes says, well, look, there's some plant and equipment that's not under finance with the bank, and there's some accounts receivables, and there might be some equity in this property that the bank's not really recognising. And we can advance more over and above what the bank can do. How do we do that? Well, we negotiate with the bank, and we say, look, bank, if we pay out your business loan, are you willing to allow us to sit behind you on the property and to fund the unencumbered plant and equipment, or the plant and equipment that's not subject to specific leasing, and fund the accounts receivable? And the bank says, okay, well, as long as our business loan is reduced, they may or may not be happy to remain on the plant and equipment that they've specifically funded the purchase of. Let's just imagine in this case they are. And this term debt against property, I prefer not to interfere with that. It's at bank rates. I mean, this client is in this situation talking to Hermes, a non-bank, because they're, for whatever reason, they're not bankable. If they were bankable, then their broker would just take them to another bank. But the bank has given them some funding against the property, and I'm going to assume that that's nice and cheap. We don't want to disturb that. Leave that in place. I say that the client, all businesses always need a bank for the whole life of the business. They don't need someone like Hermes for the whole life. They maybe need us for 1 year, 2 years, 3 years. So try not to disturb this property. That's my personal philosophy. Of course, it may well be that the bank wants that property taken away altogether. Then you can go to another mortgage specialist, that's fine. But let's say in this case, we're busting the myth that a non-bank lender can't work with the bank. Well, in this case, we are working with the bank. We've worked out a strategy that we're going to take the pressure off them. We're going to free up some assets. And so where do we end up? We end up like this. We take this away from the bank, the business loan's paid down, and then Hermes comes in and perhaps we provide some term debt. And on top of that, we're looking at the AR, and so now we're providing some working capital. We're providing some term debt. And so we're helping that business. It may well be that they needed to buy some extra equipment, buy another business, buy another property. Maybe they've had to pay out the tax office. They've had to solve some other problem that the bank wasn't willing to solve for them. And having solved that problem, they need some working capital. So as I like to say, to make sure that they've solved the problem stays solved. And so up here we've got the facilities that Hermes Capital's provided. These bank facilities still stay in place. So as the business goes through whatever the situation is that they required Hermes for, this funding they won't need so much. It might be that after a year or two, their bank has seen some nice financials and they're willing maybe to come further up the further up the ladder, that's fine. But in the meantime, Hermes has been able to work hand in hand with the client's bank, obviously facilitated by the finance broker, to achieve an outcome that frankly the bank was happy to achieve, a reduction in their business facilities, again assuming that the client is under some sort of pressure. But the client's also been able to achieve some extra capital to help them get from point A to point B and beyond. So the myth is that a non-bank lender can't work with an incumbent bank. I say that myth's busted.